Before starting to use a cryptocurrency exchange, you want to look into some basic concept about the cryptocurrency exchange, and for this will help you know which one is more beneficial to you and how to maximize on the benefits that each of these exchanges has. Now we've put together some basic materials that will help you understand the trading fees, which is one basic concept for users. The trading fees enables you to reduce the amount of money you spend in carrying out transactions on these exchanges. On Coinmarketcap, you want to see that the top cryptocurrency exchanges. We have Binance as the leading or the number one cryptocurrency exchange in the space. Binance currently has an exchange score or trust score of about 9.9. Volume being traded is very massive, about $8.8 billion dollars being traded on a 24-hour volume basis, up by about 15.67%. Average liquidity is 828 weekly visits for users. There's about 21 million users. Then markets available at 1,665. Coins listed 391. Fiat supports fiat as well as the volume graph is also available. Now for Coinbase Exchange, which comprises of Coinbase itself as well as Coinbase Pro, the Coinbase has an exchange score of 8.4. That's the trust score. Then the volume being traded on a 24-hour basis is about $2.5 billion, up by about 2%. Average liquidity is 742. Weekly visits is 2.4 million users. Then 511 markets. Now you want to take note of these basic figures, the differences here. The trust score is very good as it gives the users a level of confidence that the platform is very safe to use and more. Also, you also want to take note of the volume being traded. Now, the volume of being traded helps a lot as users are able to buy or carry out transactions at will. So this gives users the opportunity to benefit from market fluctuations or benefit from their transactions in a faster pace. So this adds to liquidity. You can see that the volume being traded on Binance has about $18.8 billion, which is equivalent to that of about 10 exchanges or more put together in the crypto space. So this is a very good factor which we think is an edge over that Binance has over Coinbase Exchange as well as other exchanges in the world. Now looking at other basic concepts, the Binance or the Coinbase and trading fees in particular. Now the Coinbase Pro is a version of Coinbase itself. So the Coinbase Pro currently has one of the cheapest fees as compared to Coinbase itself. Although the Coinbase Pro is more for professionals or it has an advanced interface, but basically the fees being traded are usually usually almost the same. Now Coinbase Pro uses a maker taker fee model for determining its trading fees. The orders that provide liquidity, which are maker orders, are charged different fees than orders that take liquidity, which are taker orders. So you want to know that the fees are being calculated based on the current pricing tier you are in when the order is placed, and not in the not when the on the tier that you would be in after a trade is completed. So your fee tier is recalculated hourly based on your total trading volume. So when you place an order at the market price that gets fed immediately, you are considered a taker and will pay a fee between 0.05% to 0.6%. But when you place an order which is not immediately matched by an existing order, that order is placed on the order book. If another customer places an order that matches yours, you consider the maker and will pay a fee between 0.00% to about 0.4%. So now this is the major difference between the taker or maker fees. Now what you need to know basic scenario or analogy is the fact that, let's say in a scenario where you want to buy a Bitcoin which is for about $40,000, but the price of Bitcoin is currently $42,000 and you are only willing to pay $40,000, so you want to wait a little bit. So what you can do is to place a limit order By placing a limit order, it makes you a maker. It gives you an opportunity to get a maker fee for a trading fee. So you'll be charged a maker fee for trading fee once your order is being executed. So that would be happen if, let's say, the price of BTC comes down or drops down to the limit order that you've chosen for the $40,000, and you're good to go. Now, as compared to taker fee are users that won't want to push through with the exact market price of a particular crypto asset. So let's say for BTC that's currently at $42,000, a taker transactions will want to buy the Bitcoin at that particular price. So it removes liquidity from the market. But the maker order enables you to hold your funds. Your funds will be held until the purchase is made, until your purchase is made. So these are one key differences between these. Now for the key cheapest fees that we can see here, is for users who have a trading volume of up to $500 million. You can see the trading fees ranges from about 0.05% to about 0.0% for maker and taker respectively. Now for bonus, you also want to know that fees being charged on credit card or debit card usage. We have a $10 fee for credit card or debit card usage, while withdrawal fee is over $25. They also support SEPA, Euros, and more, while it's free for ACH and Swift transfers. So these are major concepts about the fees being traded on the Coinbase account or Coinbase Pro. Then looking at Binance itself, let's look at the Binance fees and the fees being charged by Binance. On Binance offers users the opportunity to get cashback fees, or as a new user you get discounts automatically. So spot trading fees 25% automatic for all users, whether you have amount or not on your account. You just get access to these 25% off, as well as 10% off from trading on the futures. Now you can also check out your VIP level, which the more your VIP level, the more discounts you get on the Binance platform. Now for regular users, which are new users or users who have not traded up to more than 1 million BUSD. So for users who have not traded more than 1 million BUSD for a 30-day trading volume, and or for users who do not have BNB or do not hold BNB, which is more than 25 BNB, they get to pay a maker or taker fee of 0.1% respectively. But coupled with the basic fact that you get 10% discount off and 25% discount off for futures trading, this will now round it up to a final fees of 0.7%, 0.75% for maker and taker respectively. So this is what you'll be paying. It gives you 25% off by just being a user on the Binance platform. Now comparing these figures with that of, if you're to compare this 0.75% to that of Coinbase cheapest fees from 0.6% to about 0.4%, this should show you that the ones for Binance are usually very, very way cheaper. So if you were to do the differences, you'll still be getting a free discount of 0.35% free from purchases, 3 to 5% most likely. So you want to say that Binance is also leading when it comes to the trading fees being charged by these individual exchanges. Now looking at slippage being accepted on this platform, or looking at the Binance bid ask, for you to understand what how effective volumes is. The concept is to know that the bid ask spread, because it is the gap between the lowest asking price, which is the sell order, and the highest bid price. Now when it comes to trading, you want to know that basically the bid ask spread may be informed or may be formed in two different ways. First, it can be created by a broker or trading intermediary as a way to monetize for their service. So second, it can be created just by the differences between the limit orders placed by traders on an open market. So in traditional markets, the bid ask spread is a common way of monetizing from trading opportunities. For example, mini brokers or trading platforms offer commission-free services that only monetize by making use of the big ask spread. So this is because they are the ones that provide liquidity to the market, meaning that sellers and buyers need to accept the price determined by the broker, otherwise they cannot participate in that market. In other words, they set the difference between selling and buying prices and make profits from it. So essentially, buying at a low price from sellers and selling at a higher price to buyers. So with cryptocurrencies, most trading activities occur on cryptocurrency exchanges, where buying and selling orders are directly placed by the users or traders into the order book. In this case, the exchange doesn't monetize from the spread, but only from the trading fees. So you want to know that usually high volume markets have a lower spread because of their higher liquidity. So more competition among buyers and sellers. So on the other hand, markets that are not liquid enough and present low trading volume tend to have a more significant spread. So the more significant spread could be a little bit more disadvantageous for most users, as it is very, very good. So you want to take note that an exchange that has a lot of liquidity is very much beneficial. So for Binance here, you want to see the liquidity that is available, and the volume being traded is a lot, so it gives users the opportunity to easily buy and sell at a faster rate as well as a cheaper rate too. So this is one of the major reasons why Binance reduces or gives out discounts to its users, because there are loads of users currently utilizing the platform. So at the long run, they make it's still a win-win for everybody, but it's usually more beneficial to the users or new users. So we do feel it's a good factor to put into consideration when considering an exchange you want to get involved with. Now, looking at the slippage on the Coinbase platform, it said, what is the spread? So when you buy or sell cryptocurrency, the spread is the difference between the current market price for the asset and the price you buy or sell that asset. So Coinbase includes a spread in the price when you buy or sell cryptocurrencies, or in the exchange rate when you convert cryptocurrencies. So this allows us to temporarily lock in a price for trade execution while you review the transaction details prior to submitting your transaction. Now, looking at how does the spread impact crypto conversions on Coinbase. So the spread is applied to the exchange rates when converting between two cryptocurrencies. So when you're converting between two cryptocurrencies, the conversion is based on the exchange rate between those assets, not the cash value. So the exchange rate is determined by the market and is shown in the confirmation screen when you confirm the conversion. So for instance, let's say if you were to trade BTC for ETH, and the exchange rate of BTC is 1 BTC equals to 10 ETH, but BTC is currently worth $1,000, while ETH is worth $95. You would only receive $950 minus the applicable spread for the transaction. Now, for users who do not know what slippage is when the price of an order executes at a drastically higher or lower price than you expected. So due to the volatility of the cryptocurrency market, the price of an asset can fluctuate often depending on trade volume and activity. So if the bid-ask spread on the exchange slips more than 10%, then your order will be cancelled. So for instance, if your ETH buy executes immediately at $1,800 and the market price is $1,860, but the price goes down to $1,841, this is slippage and you collect more ETH. In this example, the slippage percentage is 1% and your order would still execute. So if you were to trade BTC for ETH and the exchange rate is 1 BTC to 10 ETH, while the cash value of the BTC is $1,000 and ETH is $75, the exchange rate suddenly changes to 1 BTC equals to 9, then your order will be cancelled. In this example, the slippage rate is more than 10%. So overall, you want to know that the factors that affect slippages is the amount of liquidity in the market, which is how quickly you can buy and sell an asset without impacting the price. So if there's low liquidity or trading volume in the market, you want to be aware of this particular fact. So note, if the amount of slippage in an order were to exceed the spread applied to the order, Coinbase will cancel the transaction as a safeguard against losing value due to unexpected exchanges. So in this concept, you want to know that the liquidity plays a cool role in this, in avoiding these basic issues. On Coinbase, there are also other services, wallet service, Coinbase cards, staking services, and also on Binance you can also find this. Now, when we look at loyalty rewards, on other ways for you to be able to reduce your trading fees as different from the fees being listed there. You want to know that Coinbase offers a referral program where users who refer can get access to discounts or kickbacks. You can get access to kickbacks or trading fee discounts when they utilize when a signee utilizes your link and signs up on Coinbase. Now, this bonus you can get up to 10% bonus, cashback bonus, or 10% trading fee bonus. So I'm going to click on the link for you to see. All you need to do is to go, okay, this is how to set it up. So will I be taxed on referral bonuses? It says referral bonuses and other reward amounts, $600 will result in a 1099 MISC being issued. So you want to be aware of this. There's a fee being issued on the referral bonuses. Most times, as compared to the referral bonuses we've gotten from signing up on Binance, there are usually no charges. The charges are usually very minimal if you ever get to get charges. Now, for Binance, we do have a link that gives you a cashback bonus when you trade on the Binance platform for life. So aside the 25% off you'll be getting from sports wallets, or aside the 10% off discount you'll be getting from futures, you also get an additional 10% and an additional 5 to 10% sports trading fees discount. So instead of you to pay as much as 0.75, you might end up paying 0.05% or 0.606%. So this is one of the benefits between using our link in the description box. It gives you the access to these basic opportunities. Now you need to understand the order types. This is for the different types of orders. For market orders, which are orders being paid at the exact market price. Limit orders lets you set a minimum price for the order to execute. The limit order has to do with your maker fees, which are users who provide liquidity. While the stop limit lets you specify the price an order should execute. If the market order falls to your stop price, your order will trigger a sell. That's how it basically works. So guys, we're now coming towards the end of this tutorial, guys. We do hope you all understand some basic concepts. Now, for a final note, you want to know that Binance extends the zero trading fee promotion to all USD stablecoin. Now, these trading fee promotions, we've checked on Coinbase. There are no trading fees promotion as of recording. There are no trading fees, but one thing that we've seen or we like about Binance is the fact that Binance has loads of promotions available to users. So due to the fact that there are loads of users on the Binance platform, they try as much as possible to give back to the community or give back to the society as a way of thanking them. So this is one factor that we find interesting on Binance. So users can trade using any of these pairs without having to pay fees on the Binance platform. So this is one good fact. So if you're a user who wants to trade, you can trade on these without having to pay or without having to worry about fees at all. So you can buy as much as of this token and make or profit from as much of this token as much as possible. So the initial promotion period is from 2202, but Binance has extended it up to June, July, so users can benefit from this. And most likely, there still will be an extension. This is just one of the beginning process for zero fee maker fees promotions. So during the promotion period, trading volume on the USD stablecoins will be excluded from VIP trading volumes. Standard trading fees apply after the promotion ends. Please refer to the VIP tier fee structure for details. So guys, this is one major concept. And I do hope you understand this tutorial. We do hope this will help you to make your choice and give you an overview of what to expect. I'll also be dropping links to some other articles we've seen so far that talks about differences between Binance and also Coinbase. This one talks about fees supported, features that you get to see, cryptocurrencies, security features, types of transactions. Now, most users do find Coinbase a simple interface, which is good for users who want to start, who are new to cryptocurrency. But Binance also has a very friendly version, which is very user friendly, and it's also very beginner friendly. Now, the good thing about Binance is the lots of opportunities that you have there. You can stake, you can earn, you can also auto invest, you can do loads of things. It's more like a digital. It's more like the concept of a traditional bank, but it's more in the in the crypto space. So it gives you the opportunity to do loads of stuff. You also get access to lots of altcoins or coins being listed, so you can easily profit from this. Unlike Coinbase that has a lesser amount of coins being listed, you might have to make withdrawals or have to follow through third party routes before you can get access to these tokens. So thanks for watching, guys. Don't forget to subscribe. See you in our next upload.